So China is trading US dollars for gold. They're getting rid of dollars and they're buying gold. Great. Who cares? You do. Why do you care? Because it's going to make you poorer. How's that going to happen? That's what we're going to discuss. I do the show, these episodes, 3 days a week, Monday, Wednesday, Friday. I call it Dollar is Dead. The reason I say the dollar is dead is because I'm trying to wake people up to the fact that owning assets over the long term is better than owning dollars. If I were to say to you, hey, would you like to hold something financially that goes down in value or something that financially goes up in value? What would you say? That's obvious. You would say, well, I want the thing that goes up in value. Yet, very few people do it. The dollar over time has been proven that it goes down in value. You know this. Housing prices have gone up. Cars have gone up, especially in the last couple of years. So this happens over time. Obviously, these things continue to go up because of inflation. But in the last couple of years, it's just been painfully obvious because things have gone up so fast. Inflation has impacted us. It was just a year or two ago, it was around 8%. Now, things like food and other things have gone up substantially. Okay, so you get the point. The point is the dollar is going down in value. You should probably own assets. So thank you for watching. If you don't mind, smash that like button. It gets this out to more people. I want to spread this information. And subscribe if you haven't already. I greatly appreciate it. I'm a big believer that real freedom is financial freedom. So most of my videos are about helping people get out of debt. But once you start having savings and you want to start investing, I like to talk about just with respect to your savings, not your IRA and your 401k and your stocks, but holding cash for an emergency fund makes perfect sense. But holding tons of cash over a long period of time really doesn't make sense. Now, none of this is supposed to be financial advice, but I'm telling you what I do. And every Friday we talk about what you can do and how you can diversify into other assets. But now I'm going to just constantly try to prove that point that we've got to be careful with what we're holding because we don't want to lose our purchasing power. All right, so take a look at this. China. Why do you care? Well, you care because the United States sells treasuries. In other words, they basically go out there and say, hey, other nations and pension funds and others, would you please give us a loan? Because we, the government, are spending more than we're bringing in. That's not great, but that's what they do. So if you look at this, they show that here in this first article, holders of U.S. Treasuries, you can see which countries hold the most treasuries. And what does that mean? It means that they're giving loans to the United States. Japan as number 1, China as number 2. So if the U.S. wants to keep spending more than it brings in, which it's been doing, they don't seem to want to stop. They've got to get someone to give them loans. China's number 2 as holders of U.S. Treasuries, meaning number 2 in terms of giving the U.S. loans. Now, gold in central banks. China has the most gold. U.S. is number 2. Now, that's of the third quarter of 2023. So the third quarter would be ending in the end of September. All right, look at this next one. And I'm getting to a point here. This is a chart of China's treasury holdings. In other words, how much in terms of loans they've given the U.S. In 2011 to 2014, it peaked twice at about $1.3 trillion. So they bought $1.3 trillion worth of U.S. treasuries. They were holding that much. That's 1,300 billion. Now look at today, as of, I believe, Q3, 800 billion, which is a little more than half of what they used to hold. So China has been buying less and less, giving the U.S. less and less loans. That's not good for the U.S. dollar because this is what they call de-dollarization. Now, if you look at this, Dan, I'm not going to try to pronounce his last name, but here's his tweet where he shows in graphical form, which makes it much easier to see, the fact that the amount of gold that they're buying is going up and the amount of U.S. Treasuries is going down. And this was actually as of Q4. So what they're showing is the fact that China is buying more gold and holding more physical assets than U.S. dollars. Now, you can see here that 1 ton so you know, because it's looking at, what is this? They have over 2,000 tons of gold. 1 ton is 32,000 ounces. Currently, gold's about 2,350 an ounce, which would make 1 ton worth over $75 million. And that's right here. It shows Q1, which is March 2024. The end of March of 2024, they had over 2,200 tons. All right. So what is my point here? Well, a couple things. It matters to you because we want countries to loan money to the U.S. At least we have to if we're going to continue to run deficits. The more we run up deficits, the more of a risk we look like to other countries. Imagine this. You've got 2 uncles. One always holds his job. One always pays his bills. The other one never holds his job. He's a drunk and he rarely pays his bills. They both come to you and say, will you give me a loan? Well, you know which one you're going to loan to and you know which one you're not going to loan to. Think of countries the same way. So when other countries are looking to get a return on their investment, they're looking to loan some money to another country, they're going to pick the country they think is more likely to pay it back. The U.S. has always been that number 1 country that's most likely to pay it back, or at least one of the top ones. Well, the more debt we run, the more deficits we run, the fact that our GDP, which is the output of products and services of our nation, goes down, so we're running more debt, we're becoming essentially lazier. Well, would you want to loan to that guy or that gal who's running up more debt and becoming lazier? Probably not, which doesn't help us as a country because now we've got to pay higher interest rates. And currently, this episode is June of 2024. In June of 2024, the U.S. has over $1 trillion in interest payments alone. Do we want that to go up? Of course not. Because now all we're doing is paying interest. We can't even pay interest on our debt. We can, but that's because we're printing money. We're printing money. We've got inflation. Your dollars are worth less. So I'm trying to point out, and please subscribe so you see the Friday show where we say, look, yeah, hold some cash so that you can transact on a daily basis. You can pay for those emergency things. But for longer term, you might want to look into holding things like gold and silver, like these other countries and central banks are doing, and now even crypto. And watch Wednesday's episode because we're going to talk about crypto and Bitcoin specifically, and things like gold, and how this is changing in the way countries are looking at it. And what does that mean for you? Well, in my opinion, it means that, like I do, I hold things such as gold and silver and crypto, and I'm a big believer in crypto. But even if you aren't, the point is assets go up in value over time. The dollar does not. Wake up, understand that, and you might want to diversify so that you can maintain your wealth. You want to beat inflation at the very least. Match it so you don't lose value. Thank you for watching. I hope this is helpful. I always want to point out things because sometimes it takes a while for people to click in their head and understand dollar versus assets. Thanks for watching. And remember, true freedom is financial freedom. Get out of debt. Watch my videos to help you get out. Start saving for your future and your family's future.